Good morning, everybody. It's Thursday, September 15th, 5:41 a.m. Central Time as I speak here. December corn futures up 1 3/4 at 684. November soybeans up 3 3/4 at 1458 3/4. December Chicago wheat down 5 3/4 at 866 1/2. December Kansas City wheat down 3 1/4 at 943 3/4. December spring wheat down 1/4 cent at 937 3/4. If you guys are listening on the podcast, as always, appreciate it. Leave me a rating or a review on that Apple Podcast app in particular. If you're watching on YouTube, guys, make sure you subscribe to the channel. Hit the like button. Leave me a comment. If you've got a harvest update, crop update, opinion on anything that I say here, drop a comment. It will help YouTube to help me to grow this channel. If you'd like some additional information from me, go to my website, www.standardgrain.com. Check out my premium subscription service today, guys. I send my premium subscribers a ton of information direct from me every single business day. The morning email goes out about 5:30 a.m. Central. In that email, you will see every overnight headline you need to be aware of. Charts, graphics, weather info, all of my grain marketing recommendations. My daily subscriber-only videos are part of this deal. Yesterday, I talked about two things, the potential for U.S. sanctions on China. I'll talk about that here in a second. Also did a discussion of the railroad situation. If you guys are interested in this content, sign up today, $50 a month, cancel at any time, no other fee, no other obligation, and nobody will try to sell you anything else, I promise. The White House has struck a tentative deal that would avoid a U.S. rail strike. The president and the White House released a press release early this morning. For the American people, the hard work done to reach this tentative agreement means our economy can avert the significant damage any shutdown would have brought. That's what Biden said in a statement that was posted on the White House website. Labor Secretary Marty Walsh said that the tentative deal had been struck after more than 20 consecutive hours of negotiations with unions and rail companies. As of about 5 a.m. this morning, I have not seen comments from either the unions or the rail companies, so you would like to see some confirmation from those two groups, ideally. But this looks all well and good. It looks like we'll avert a strike, and this is exactly what we wanted. We did not want to get into a situation where the railroads weren't running. It would just be a catastrophe for so many different reasons. But this is what the White House says this morning. We'd like to see some comments from the rail companies and the unions, of course, but it looks all well and good here, at least for the moment. And maybe that situation has changed even by the time you guys see this, but I have not, as of about 5 a.m. this morning, seen comments from either of the groups. From one crisis on to the next, the U.S. is reportedly considering a sanctions package against China. Now, the reporting here is kind of sparse. I've really only seen Reuters report this. I haven't seen it in Bloomberg or anywhere else for that matter. But Reuters is reporting that the sanctions against China, these potential sanctions that the U.S. would impose against China, would seek to deter China from invading Taiwan. The European Union is reportedly being pressured by Taiwan to take similar measures. Now, Reuters, in their piece here, cited only unnamed sources familiar with the situation. They don't have any official comments from White House representatives or anything like that. There is supposedly a draft congressional legislation that has outlined a full range of punishing sanctions that could be imposed on China, including excluding Chinese banks from global markets, bans on U.S. listings of Chinese firms, imports of Chinese goods, curbs on Chinese energy projects. One former U.S. Commerce Department official said this: the potential imposition of sanctions on China is a far more complex exercise than sanctions on Russia, given U.S. and allies' extensive entanglement with the Chinese economy. One other former U.S. government official said this: I suspect many U.S. policymakers will feel reluctant to take very severe measures, at least before an actual invasion. He explained that such moves could substantially harm America's economy. So this is another crisis that we would very much like to avoid. We don't want to see sanctions on China. We know what happens to our grain markets in particular when we get into some sort of trade war with China. So again, a deal. You hope this is not reality. You hope that we don't just go impose sanctions on China before China takes any sort of action against Taiwan. And I don't know. I don't know how these sanctions would necessarily accomplish the task of deterring an invasion. I don't know how the sanctions would do anything along those lines. So again, I'm not seeing this reported everywhere. This was a Reuters report out yesterday, and we'll see if any new news develops here today. U.S. ethanol production declined last week, 963,000 barrels per day. That was off 2.6% on the week. It was up 2.8% versus the same week last year. We are pretty much tracking normal seasonal patterns in regard to ethanol production. Typically, you'll see ethanol production rebound in October when you see harvest corn deliveries begin more broadly. Ethanol stocks were off 1.3% on the week, but are still at very high levels. Stocks are at the second highest level on record seasonally, behind only 2018. Gasoline demand is soft. On average, over the last 4 weeks, implied U.S. gasoline demand is running 9% below last year's levels. Seasonally, demand has been worse over the last month than it was during the same period in 2020, which is really saying something because 2020 we were still dealing with COVID in a very significant way. Now, some analysts, and this is the other side of it, some analysts believe that the gasoline demand numbers are too low and misleading. They think that EIA's reporting system is flawed as it relates to exports in particular. Put simply, a lot of people think that they're overstating exports, which means that implied domestic demand is understated. So maybe some kind of noise in the data here. The National Oilseed Processors Association, or NOPA, will release August crush data later this morning. This report will be out at 11 a.m. Central Time. Ahead of the report, traders estimate the NOPA members crushed 166 million bushels of soybeans in August. If that's confirmed, it would be off a couple percentage points versus last month, but up almost 5% versus August of last year. Just like ethanol production, soybean crush typically accelerates around October as harvest deliveries of soybeans begin. It's pretty normal stuff there. Got some scattered rains in some areas this morning. I think North Dakota or the eastern part maybe had some rain overnight, and there's a system here over this north central part of Minnesota. Separate system over, say, central to south central Nebraska working its way east. Over the next 7 days, rains kind of favor northern areas like parts of Michigan, Wisconsin, maybe a little bit of northern Illinois, parts of Iowa, parts of Minnesota, maybe a little bit in Nebraska. Not any huge system or huge amounts. The plains may see some rain here, maybe a quarter up to a half. Same thing with the eastern Corn Belt. A lot of the mid-south, southeast are going to be on the drier side here. 6 to 10 and the 8 to 14 day model or maps calling for odds of below normal rainfall, above normal temperatures. So I don't think we're going to see an early frost hurt crops really anywhere this year the way it looks. U.S. wholesale inflation declined for a second straight month. The Producer Price Index, or PPI, rose at an annualized rate of 8.7% in August, which is still really high. But this thing peaked at, I think, 11.3% back in March. No, 11.7% back in March. So the numbers have moderated a little bit. I mean, 8.7 annualized is still really high, but it was almost 12% back in March. The number did decline by 0.1% on the month. Decline in gasoline prices and a small decline in the cost of goods contributed to the slightly cooler print. One economist interviewed by Bloomberg said this: goods inflation should continue to moderate amid cooling demand, better supply chain performance, and the strong dollar, but producers are contending with strong wage pressure, especially in labor-intensive services industries. The report adds to concerns about a potential wage price spiral, particularly within services, likely keeping the Fed hiking rates through the first half of 2023. So the CPI number, I think, is the one that was out earlier this week that people really put a lot of weight on. This one was not discussed as much because it was very close to expectations. We should finally see an export sales report from USDA this morning. They say they're going to put a report out at 7:30, and they're going to have a few weeks worth of backdated data. For the current marketing year, sales this week expected at 300,000 to 900 for corn, soybean sales 300 to a million, and wheat sales 200 to 550. Live cattle finished mixed to lower yesterday. Feeder cattle were mostly higher, just by a little bit. A little bit of cash trade, 142 to 144 in the Western Corn Belt. U.S. dollars just a little bit higher this morning. The stock market marginally lower ahead of the cash open. The S&P's down 9, Dow Jones down 50, bonds off a little bit. Gold's down $14, crude oil down 58 cents at 87.47 in the November WTI. Have a great day, guys. I'll talk to you Friday.